All right, so we're getting at that time of the year where it's tax time and taxes are due. And if you're self-employed or if you owe tax money, what impact does that have on your mortgage renewal? If you've got a mortgage coming up, or maybe this year you're looking to refinance your mortgage to pay out some debts, maybe pay out the CRA debt. Well, to stay in prime A lending category, part of the struggle is that if you owe money to the CRA and you've got outstanding tax debt, a lot of prime A lenders will not allow that. They want to make sure that the government's paid first. Reason being that when something happens and the time comes to pay the piper, government always gets paid first. Everybody else is in line waiting. So prime lenders want to make sure that your CRA debt is paid completely. So if you owe a balance on your CRA account before your mortgage renews or before your mortgage is, or before you want to refinance, a couple solutions you can do to get that paid off. If you have a line of credit or a credit card that you can put the balance on to pay out, you can do that short term because the interest rates are going to be a little bit higher than your mortgage money. But if it's a short term situation to pay that debt out and keep you in the prime A lending rate and best rates available, then you can pay it out that way, get it paid off. If you have cash to pay it off, you can do that as well. But let's say none of those options are available to you. One thing you should keep in mind, if you do put it on a line of credit or a credit card, it will show up on your credit bureau as a liability, which does count towards your debt ratios and your qualifying. So before you do that, let's have a conversation to make sure that it's not going to affect your qualifying and throw your debt ratios out of whack and then throw you out of prime lending altogether. So the other option to do is an equity loan. And by that, I mean, let's say you don't have a line of credit available, you don't have one set up, you don't have credit card space to pay off the debt or what that is, but you've got a ton of equity in your house. And let's say your mortgage is due in 6 months from now. So the strategy here is to go to one of our equity lenders and we take an equity loan out on your house where they do register against the home in second position behind your existing mortgage. And we pay off your CRA debt completely. So now we pay the CRA debt off. You've got a mortgage in second position. The time comes to renew or refinance because now you can refinance. Get your mortgage money out of the house, get your equity out of the house at the cheapest rates available, pay off the equity loan, pay off your other credit cards or your other lines of credit or whatever you have outstanding. And now you've got all of that outstanding debt at the lowest possible rates available. And one of the things to remember with equity lenders is some equity lenders report to the credit bureau. Some equity lenders do not report to the credit bureaus. It depends on the lender and your situation and what's available. But for the ones that do not report to the credit bureau, that means that it doesn't really affect your debt ratios and can keep your qualifying steady moving into qualification to keep you into prime A lending. So a couple of solutions to help get you out of CRA trouble to make sure that when you're positioned for your mortgage renewal, or if you're looking to refinance this year, you're positioned for best rates available. If you've got questions about these strategies, or if they're maybe right for you to make sure that it works and doesn't throw things out of whack for you anyway, we'd love to have a conversation. Reach out anytime. We can have that chat and we can find out if that's the best solution for you.